Hey all, welcome to ShareTrekc. This is Raj here. Friends, Invitae reported just a few hours ago and I went through their earnings and here are my impressions. We had recently done a weekly spotlight on Invitae with Sandeep, which happens every Monday. So I don't have much to add here except the earnings report itself. So let's get started. Welcome back, friends. Here are the key points from the earnings transcript available at the company website. So Invitae reported a year-over-year revenue decrease of 9% and came in at 121.2 million in Q3 2023. Their revenue grew approximately 4%. Their gross margin improved from 12.4% in the same quarter last year to 32.2% in the Q3 of 2024. And for the last 9 quarters, we have seen steady improvement in their gross margin. The bad news, however, is that the operating expenses rose sharply to 1 billion as a result of significant restructuring and impairment costs, and the company expects revenue between 480 to 500 million and non-GAAP gross margin of 48 to 50% as per earlier guidance. As of September 30, 2023, Invitae had 264.7 million in cash equivalents, restricted cash and marketable securities, which is a decrease of around 557.1 million at the end of 20,200, which is a decrease from 557.1 million at the end of 2022. The net decreases in these assets for the quarter was 72.2 million with a cash burn of 64.1 million. Another item that caught my eye in the earnings report was this sentence that I'm reading out here. Operational improvement efforts and expense control have resulted in margin expansion and stronger financial performance. In addition, the company is engaging with stakeholders to strengthen the balance sheet, and the board of directors has formed a special committee focused on improving the company's capital structure. The company is exploring a number of options, including but not limited to raising capital, asset sales, businesses, and R&D refocusing efforts, capital expenditure and operating expense reduction, and addressing its debt obligations. So it's engaging all its stakeholders. So I think this is something every Invitae shareholder should watch very closely because it could have an impact on their portfolio. I'm always afraid of equity dilution, but there are other ways also in which things can be painful for the shareholder. But we'll have to wait and see what they come up with. The fact that they have acknowledged that they have a problem is the first step towards resolution. Now let's go to our TradingView platform and have a quick look there, if I can tell you anything more from that platform. So here we are in the TradingView platform and I'm looking at the chart for Invitae. Each of this candle is a one-day candle and this is a long-term chart, and you can see that Invitae has fallen significantly and it's in the sub-dollar range. So things are not looking that great from a pricing perspective, but I can see a bit of positive technicals out here. First of all, momentum is above average, that is good. MACD is bullish, that's also good. And the other thing that catches my eye here is the golden cross out here, where a shorter term exponential moving average is crossing over the longer term exponential moving average. This is a positive. However, today the share opened high and dropped below, and post-market it's seen a 12.94% further drop. I think the paragraph which was talking about the concerns about the debt is probably making people worry about this. So because the share is already below $1 and it's dropping further, I would be a little scared about this company at this point of time. But again, that's my personal opinion and not financial advice. But if we were to zoom out and see that we were at a high of around $1.58 somewhere on the 20th of July 2023. Since then, we have dropped significantly and we have ended the day at 69 or 68 cents. So it's not looking that great. I don't have anything more to add to this. And in these kind of companies, when the share price is very low, I always try to resist the temptation to buy a bunch of them because it is cheap and that I can trade on a 1 cent or 5 cent price movement, because invariably when the company is in this kind of a situation, the chances of going down is more than chances of going up. So I would wait and watch what happens to this company in the market in the next few days. and also wait to hear from them about their financial strategy of how they're going to tackle the huge debt. And we'll see what happens. There is no compulsion to invest immediately. One can wait, look at all the information that comes out, and then decide to enter. There will always be opportunities to make money, not only in this share, but in other shares as well. So caution is advised. So with that, I would like to end this video here, and I'll catch up with you again in the next video.